Hi, I'm Jimmy. In this video, we're looking at Intel, ticker symbol INTC. So, a lot has happened with Intel, mostly that their stock has continued to crash multiple times over the past year or so. Our goal with this video is to see if the most recent drop makes the stock look like a good buy. Now, it's also important to point out that I personally own shares of Intel. And if we're curious, I bought those shares right around this time period. And I looked it up recently. My average entry price for this stock is $48.17. Right now, as I'm doing this video, well, the stock is slightly above $47 per share. So that's slightly below where I personally bought it. Okay, so let's dive into their business and look at what's been happening with their stock recently, and then we'll see if we can come up with what could be a fair value for their stock. Okay, so let's look quickly at Intel's business. So broadly speaking, Intel breaks their business into two main segments. Their largest segment is their PC-centric business, which accounted for about 52% of 2019 revenue. And then their slightly smaller segment is what they call their data-centric business, which accounted for the other 48% of revenue. Now, Intel goes ahead and breaks their data-centric business into more, let's call them sub-segments. So let's touch on some of the key ones, or at least some of the key news that has come out of the most recent earnings report, which was the cause for the most recent crash in Intel's stock. So one announcement out of the earnings report is that Intel's selling their NAND business. They're selling it to SD Hynix. And that actually came out a few days before their earnings report, but they went over it in their earnings report, so we should probably at least take a quick look at it. And if we're curious, NAND is mostly referring to Intel's flash memory business. And in my mind, it actually makes sense for Intel to sell this business because what they can do is they can take that capital and apply it to other lines of business that, in theory, have more upside. Just as an example, Intel says that they're using the $9 billion that they're getting for selling the business, and they're going to apply it to segments like artificial intelligence, edge computing, and 5G. So I think we can all agree that these business lines are probably more productive uses of that capital. Okay, so that's a positive thing. Now let's shift over and look at some of the negatives. So I think that the broader attitude of investors or Wall Street towards Intel has been fairly negative. And I think that this at least partially explains why the stock keeps getting as hurt as it does pretty much every time they come out with earnings. Now, I'm not saying that the negative attention isn't deserved. Intel, in their most recent earnings report, well, that was their third quarter report. Well, in the third quarter, they saw a dip in their data center revenue. That revenue dropped by 7%. And then there was a drop in what they call their enterprise and government segment. And that was a surprise to many analysts. So yes, there's absolutely been problems for Intel. And I think that ultimately the fear is that companies like AMD or NVIDIA will take away from Intel's core business, since many of AMD's and NVIDIA's products compete with what Intel's products are trying to do. And since Intel has fallen behind, at least from a product development standpoint, at least for some of their product lines, well, it's very logical and easy to make the case that a company like AMD or NVIDIA deserve investments more than a company like Intel. For me, a lot of the concerns about losing business at least losing business to competitors is completely logical. But with that being said, I don't think that the takeover of Intel's business is quite as imminent as it could be. Here's what I mean. And don't forget that this is just my opinion, and I do own shares of Intel, so it's very possible that I have sort of rose-colored glasses on, although I'm trying really hard to stay objective and not to see things from a skewed perspective. But here's the way I see it. This is a chart of the growth of Intel's revenue versus AMD's revenue from the past 12 months compared to the 12 months before that. And as we could see, well, AMD has grown significantly larger or significantly faster than Intel has grown. In fact, AMD has grown at almost triple the rate of Intel. But here's where the real problem is for Intel, and that is that AMD is growing at the expense of Intel. Many of Intel's customers, or at least some of Intel's customers, are going to AMD's products. So it's not necessarily just that AMD is growing, it's that they are taking the business away from Intel. So in theory, Intel will lose growth and AMD will pick up more growth. for at least as long as AMD's products are comparable but cheaper or superior to Intel's products. So with that being said, when I say that I don't think that this is a imminent problem, what do I mean by that? Well, it is a problem. I'm just suggesting that it's not like the game is over and AMD has won. To illustrate, let's switch this chart. This is the percentage growth of revenue from the past 12 months to the previous 12 months compared to the previous 12 months. But now let's switch this to the dollar growth over the exact same time period for the two companies. Now we can see that, yes, Intel is growing at a slower rate than AMD is, but Intel is so much larger than AMD is that the actual dollar growth for Intel is way bigger. To put this in another light, AMD's total revenue over the past 12 months is about the same as Intel's growth from year over year. And if we're curious to see Intel's total revenue compared to AMD's total revenue, well, clearly we can see that Intel is quite large relative to a company like AMD. Now, I'm not denying that AMD is growing at a much faster rate, and that's great. That's a great thing for AMD. I'm just suggesting that they still have a long way to go. So here's another way that we can look at it. So I was curious how long it will be before AMD catches up to Intel, at least from a revenue perspective. And here's just one possibility. So we know that over the past year, AMD has grown by 30% and Intel grew by 11%. Now, I don't expect either company to be able to maintain those numbers for any lengthy period of time. So I went back and calculated the average growth over the past few years. And when I calculated the average revenue growth for AMD going back to 2014, well, their average growth was about 9%. And I also calculated Intel's average growth over that very same time period, and their average growth was about 6%. Now, as far as AMD is concerned, this number actually seems kind of low for me. They did have one really bad year, so that's skewing the numbers. But either way, let's imagine that AMD can grow every year by 15%. And we also want to be conservative with Intel, so let's imagine that we say that Intel can grow by 3% a year. So if we take these growth rates, and then we take our starting revenue from the past 12 months, and we grow that out each year, and we continue to grow them out year by year, well, we can see that it would be about 21 years before AMD and Intel are the same size. Now, obviously, it won't actually happen like this. Either company could do a lot to help or hurt their growth rate in the next 21 years. But the reason I bring this out is that I believe that many investors are overlooking the fact that Intel has a lot of advantages simply from their size to help improve or regain, maybe partially, some of their competitive advantage. And if they do, well, what does that look like for their stock? I'm guessing it would help a decent amount. Now, they do need to do a decent amount to regain some of their industry dominance, but I'm just saying the game's not over yet, and I think that it's very short-sighted to write off a company that has so much size and so much revenue, and broadly speaking, better margins. So I think it would be a bit early to just say, okay, AMD's beat them, it's over. They could make moves, sort of like they did with the sale of their more lagging business, like the one that they did to SK Hynix. They take that capital and apply it to more growth-oriented business lines, and they have the cash to do that, or they can bring in the cash, they have the cash to make other acquisitions. There's a lot of things that they can do. Okay, now let's look at what Intel stock could be worth today. Well, last time I did this video, I did it at the end of July. Well, there I used a discounted free cash flow calculation. And here I came up with, that was the calculation that I'd used, and I came up with a fair value of $92 per share, or $88 per share if we adjust the fair value of the stock for net debt. Now, when I rechecked analyst estimates, that's these up top here, well, there wasn't a significant change between these numbers and the new updated numbers. So, if we're okay with the 7.5% required rate of return, well, then the current stock price of $47 per share looks like a steal. So we might ask the question, will I personally be buying more shares? And the answer is yes. It is very likely that I will buy more shares, assuming that the stock doesn't go on some sort of crazy run in the next couple days. Although I do recognize that over the long run, they could lose some of their business. They could continue to lose more of their business to AMD. I recognize that that is a threat and that is their biggest threat overall. But I believe that the stock market has overreacted by selling Intel as far down as they have. And I think that it should be worth more. Should it really be worth $92 per share? I'm not sure about that. But there's a huge margin of safety between $92 or even the $88 and the current price of $47. Even if we think it's worth $10 or $20 or $30 less, there's still a decent amount of upside. Now, with that brief pro and con recap, well, we might ask, if I like it so much, how come I haven't bought more shares of Intel just yet? And the answer to that is that I wanted to make this video before I did. And as I've mentioned in previous videos, I feel much more comfortable with making a video about a company, listing the pros and cons, going through my research, and then, if it's good, going out and buying the stock, assuming, of course, that it fits my overall portfolio. To me, that's much better than buying a stock without saying anything and then publishing a video talking about how much I love that stock and try to run up the stock price. So that's why I haven't bought it just yet. Once this video gets published, I'll give everybody a couple days to decide what they want to do, and then I will make my move, which is why ideally I'm hoping the stock stays down for just a few more days. Now, I know that we looked at some of Intel's and AMD's growth on this video, and I actually did a video not too long ago where I compared Intel to AMD using something called the price to earnings growth ratio, or PEG ratio for short. So if you're curious, that could be a good way to look at this stock or another way to try to value this stock. So perhaps that could be a good next video for you to watch if you're interested. I got a link right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thanks, and I'll see you in the next video.